let's get started. Before we actually get started, I want to remind all participants. I'm just going to read a disclaimer. The purpose of this presentation is for informational and educational purposes only, and should not be construed as a recommendation to purchase or sell any security. MicroCap Club is not a registered investment advisor. MicroCap Club, its partners, members, subscribers, affiliates may or may not hold positions in one or more of the securities mentioned on this program and may trade in such securities any time. Do your own due diligence and seek counsel from a registered investment advisor before trading in any security, especially microcaps. I want to thank the MicroCap Club community for tuning into this business breakdowns with Issuer Direct. The purpose of these conversations is really to highlight some unique businesses in the microcap space. Microcaps make up almost half of all publicly traded companies. We have, I think, over 1,000 companies now profiled on MicroCap Club. Not all microcaps deserve the attention, but there are quite a few unique businesses in our ecosystem that do deserve some recognition and some attention. And our goal with this MicroCap Business Breakdown series is really to highlight those unique businesses in the highest quality way that we can. And the way we'll do that is by inviting the leaders of the companies on. And also what I like to do is invite the MicroCap Club member, the investor that knows that company best, to help lead the discussion with that company. And so my tag team partner today for this business breakdowns is Auri Hughes. And Auri is an individual investor. He's attending Columbia University for his MBA this fall. I think he's working this summer for Constellation Software. That sounds like fun. Auri has been following Issuer Direct for quite a few years, and he's been a member of MicroCap Club since 2020. Auri, thanks for joining me today.
Thanks for having me. Excited to be here.
The business breakdown, the business we're breaking down today is Issuer Direct, and Issuer Direct was profiled on the club back in, I think, 2016, around $7 per share. But I know there's several members that have owned it long before that. I think Mike Schellinger on MicroCap Club, I think he remembers buying shares at 40 cents, way back in the day. But Issuer Direct is the fourth largest newswire company in North America and taking market share from the top three. The company has over 10,000 customers across 23 countries. The business has close to 80% gross margins and pretty high EBITDA margins, and it's profitable. Brian Balbirnie, who's with us today, is the founder and CEO. He owns around 16% of the company. The stock has gone from, like I said, less than $1 per share to, I think, around $19 per share under his leadership. Brian, thanks for joining us.
Thank you, Ian. Nice to be with you, and nice to chat with you as well, Ari.
Brian, you and I have known each other for a long time, probably 10 years or so. We both sit on the editorial board at the Small Cap Institute together. I mean, we run into each other quite a bit. And one of the things that I think find us both attracted to each other is just kind of we're mission-driven people, and especially wanting to bring out the best in microcap and the small cap universe as well. And so I really look forward to this interview because, not only diving into Issuer Direct in your business, you're also a person that I respect and admire. So I appreciate you doing this. I thought maybe I think maybe a good place to start, and something I'm curious about is, I think you founded Issuer Direct in 2006. What were you doing up to that point? What led you to founding the company?
Yeah, that's a great question, and I have a long or short version of this. I'll do the short version today, given our time element, and expand upon it later for folks. I exited a public company in about 2003 and started a consulting practice right around Sarbanes-Oxley time. Catapult Consulting is what it was, and the idea behind it was coming out of the microcap and nanocap spaces. Sarbanes, you could appreciate, everybody could understand that midcap and higher understood how to deal with it. They had the infrastructure and the back office individuals to take care of it. But in a microcap or small cap, when you think about Cassel framework, you think about Sarbanes-Oxley and SOX as a control. There wasn't controls, right? These small little companies, if you need to write a check, you shout it down the hallway and ask somebody to write you a check because you had to pay a vendor that showed up at the door because they had to deliver something to you. And so we built this Catapult Consulting team from myself and my partner to about 34 consultants in the field, teaching micro nanocap companies and aspiring companies that wanted to be public and their boards how to handle and understand what Sarbanes was, built in framework, teaching programs, training platforms, and had a ball doing it for a couple of years. And the whole time that we were building it, we had to gather checklists of data, right? Where are you storing your financial data? How are you managing your financial control processes? How are you doing your SEC reporting? And that's when the light bulb went off to me. There was just broken practices and Google Drive and Excel worksheets and Dropboxes and people storing files everywhere. They had no centralized platform, or let me dare use the word cloud computing in 2005, 2006. So I exited that business. I sold it to my partner, Peter Foschel, and teamed up with another guy, Jim Larish, and built what was called MyEdgar to begin with. It was the first cloud-based software platform for public companies to use to comply and communicate with the SEC. We had endorsed by Chairman Cox. We were one of the first cloud-based softwares the SEC approved for use commercially in the market. We did the first mutual fund filing via cloud. We did the first small microcap company in XBRL. I mean, it was really the field of dreams, right? You build a product in less than 6 months, take it to market. We funded it ourselves. We didn't raise money to do it. Sometimes you win, sometimes you lose, right? To be fair, we were way ahead of the trend on what cloud computing was. And the CIO's office was not letting financial data outside of their own closed networks. So we ended up reverting back to being a traditional filing agent or Edgar provider using our own technologies. And to be fair, as we went along for a couple of years and became public, it was eat our own dog food. We'll show you how to comply and communicate with the markets like we do, and do it at a fee that fits your budget. So that's a little background.
Yeah, my question is one of the things that really kind of got me interested and attracted to this company, just coming from first looking at larger companies, was this amazing track record you've kind of developed over the years since 2006. And I think the market cap was even 180,000 at one point, which is incredible to think about. And then I saw you reached heights as high as 100 million. I think today we're around 70 to 80 million. So it's really incredible, even though this is probably a smaller company compared to the majority of companies on the market people think of. Could you talk a little bit about that journey and growing revenue and earnings over the years, and what kind of drove that? And I guess maybe your thoughts of why be public versus being private, and then maybe going public later.
Yeah, I mean, look, first and foremost, we're a fundamental-based business, right? We believe in our technology stack. We believe in the industry. We believe in our teams. And we just run a different company. We just really care a lot about cash flows, right? Like Ian said at the very beginning, I'm a large shareholder in the company, right? I put myself in the seat of an investor every single day we operate the business, right? Is that what fundamentally you're going to look for in a business and a management team, right? You have to build a fundamental, you have to have a market opportunity that has some TAM to it, right? We do. We'll talk about that in a few minutes as I go through the slides. You have to have a common principle of understanding what gross margins look like and what the profile needs to be, what scale can happen from that, and how does that free cash generate in the business? And we've built that business since the beginning that way. Look, we chose that path, right? We could have chose a different path to your kind of second part of your question, Ari, right? We could have chose not to be public. We could have chose to have raised a bunch of money and invested far too heavily in sales and marketing and tech development, way ahead of the trend in the business really kind of ramping. And so we kind of match our expense flow and investment flow and growth to the business and the market and what we're dealing with today. And look, it served us well. To your point, we've gone from virtually nothing in market cap and nothing in revenue to, well, we'll be high 30 million, almost 40 million in revenue this year, and a market cap that, maybe likely slightly undervalued today, but, was over 100. There's a lot of fundamental growth here in the business. The industry can handle growth. Where Ian said it, we're fourth largest newswire and growing at almost 6% market share. So there's plenty of upside for us. But look, I care about the revenue numbers, care about customer numbers, right? I think that the share price takes care of itself. Liquidity takes care of itself at the right times. We stay focused on the fundamentals.
Thanks, Brian. Why don't you take us through the presentation?
Yeah, I think there's some folks that know who we are, but I will try to give you the very high level today. Like I said, when we talked about it at the intro, we started as a compliance company, right? And again, we still have a compliance business inside of our operating entities. Compliance business generates probably about $7.5–8 million in revenue of what will be high 30s, almost 40 million this year. But really our pivot and change is to become this communications platform of choice, and our real mission and vision about the business has changed in this 16-year journey, right? So today, as you see on the screen, is that our vision is to reinvent how brands share, tell, and inspire their audiences. And you have to think about that from a story perspective, right? What is the message I want to tell you, the investor? What is the message I want to tell you, the customer or vendor, partner, or community? And it all starts with that message. And the message, candidly, from a MicroCap perspective, could be my quarterly earnings call coming up, right? And in the first week of August. It could be an earnings advisory. It could be an announcement of my annual meeting. It could be the hiring of a new C-level executive, a new product launch. And those elements require a news distribution, a story to be written and shared amongst the community through unique distribution, like a newswire, like we are today. It could be shared to a targeted investor list, targeted media journalist list, could be shared on social media platforms. It could be shared in a collaborative way through your own community of employees and investors, both public and private. So our message platform has a new element called Amy. It's an AI engine that sits on top of our entire ecosystem to help these stories come to life even more. And the hope and strategy of our business is to really reinvent some of the components that the industry has had for years, just doing it in a different way. And we'll talk about that a little bit today. And so I think that's where the inspiring part comes from, that excites us and what we're doing today. I skipped over the forward-looking statements. You all know them and can read them on your screen and see them in our filings. I'll leave that to be what it is. I don't want to be too repetitive on some of the things that Ian shared on the intro, right? But I think what I want to talk about, I think a little differently from a public company perspective, is something unique on the screen, absent of the customers and the employee counts, is the number of shares issued and outstanding. Like our product, like our customer, we love our common shares. We do not have any preferred shares. We don't have any warrants. We love it like our children. And, there's only 3.7 million shares of it issued and outstanding. And so we're careful and considerate in how we do share issuances, how we do, I think about capital allocation, how we do equity and debt financing, how we do buybacks and pay dividends. We've done all of these things, and we'll talk a little bit about some of that today. But I think from a MicroCap perspective, we're in a quadrant very unique that call it under 5 million shares issued and outstanding. I'm fortunate enough to do these things, right? Ian, I appreciate you inviting me to do them. And as you all know, you've seen and heard all these investor presentations, whether virtual or in person. And I should have counts of how many I've done, right? Hundreds and hundreds of these. And I'm fortunate enough to get here to talk about the business, but I couldn't do it without these people, right? These are integral individuals in each of their respective areas. I'll highlight a few of them on the screen, because I think it's important to pay particular attention to some of them, right? It's important to have a great CFO. We've got one, Tim. We've got an amazing EVP of Sales and Marketing, Jen Hammers, and a new CTO, Mark, that's been here since January. And I just happen to know Mark for like 20 years. So, kind of GM guy, big thinking guy, big tech individual, and understands where we're headed and what we're doing. But there's a couple folks on the screen that have been here forever, right? Preston Burnett, my Director of Operations. We wouldn't have a retention number the way we do without somebody like Preston running the organization. And Preston's been with us over 10 years. James, Michael, I talked about a founder, Jim Lirish, with me, that we bought Jim's stock back after a year because the business wasn't what he wanted. But James was my first hire. So he's been here 17 years, right? And today he's running our compliance business that, as I joke to some of you every quarter, saying that business is going to retract single digits every quarter. It grows by single high digits every quarter because of people like James. So it's important to point out these individuals out. Like I said, I get the fun job of getting to talk to you all about it, but these are the folks that really keep the wheel moving so that we can build this flywheel concept that we'll talk a little bit about. People know us as the boilerplate, right, as the communications company that provides solutions to public relations and investor relations. And I call that out because I could probably say a lot about what we do, but I really want to articulate. You'll hear me use the words PR and IR, and I want to be sure that everybody understands that when I say PR, I don't mean press releases. I mean the public relations side of the business. There are two elements of growth, and they come in channel, meaning referrals, partnerships, and direct customer relationships. The IR community is immense, right? IR firms, IROs, people that are in and around the IR space that refer us and or we work with directly, depending on the size of the company, right? The IRO's office of somebody like Shell, right? Client of ours. Sherwin-Williams, clients of ours. Dell Computers, clients of ours, all the way down to the MicroCap guys that you all know and invested in as well, that likely don't have an IR. They have an IR firm. And that business is good. Don't get me wrong. We can sell earnings calls and webcasts and IR websites and all these wonderful things and news distribution to them. But to be fair, like Ian's point, half the market is MicroCap of the half of that microcap, half of them don't do earnings calls or have an IR website, even have a budget for one. And so we really want to look at, when we see a product set, news distribution and communications as an example, we have to examine the total addressable market. Okay, so I want to be careful when we say public relations, this is where the bigger opportunity is for us. And we'll talk about some products and how we believe we'll get there in a few minutes here. Well, actually right now. As you read our filings and you get to know who we are and or you know us already, I don't want to call them segments because FCC doesn't want us calling them that, but we've got two revenue streams that we drive product and tech-enabled service growth from. Our compliance business, as I just mentioned, with James Michael, is built around our disclosure platform. We used to call it Blueprint. It's just now part of our Platform ID subscription. It also handles all the registered agents of this typical stock transfer service. If you're public, you need a stock transfer agent. Community banks are great clients there for us. The lifetime value of those clients typically are 7+ years and greater. Some of them account for 6 figures in annual spend as well with all the services that they buy, because it definitely includes their annual meeting, print and fulfillment, and some of the other services that we provide around shareholder management. Again, the compliance business is our core foundation of our business. I've been very deliberate and told everybody we generate more than half of our free cash flows from our compliance business. And as we build scale in our communications business, we likely will look for a divestiture of that product set at some point in the future. Not today, but at some point as we build critical mass and what our core competencies are around communications, we'll find that compliance just isn't a fit for our long-term business. Today, we generate revenues of about $24 million in news distribution, newsrooms, webcast, event tech, and IR websites, right? These are the product sets of choice and of focus. I highlighted 3 on the screen because these are 3 products that will be released here at the end of the month. Is a media database product, a pitching product that goes along with media database, and a monitoring tool. And so these product sets take our addressable market from about 1.5 billion in news distribution and webcast and IR product sets to about $4.5 billion in total addressable market. And that's really where this public relations comes in, right? The PR firms, the private companies around the world need to tell a story. But unlike the public markets, where I can hit Bloomberg and your brokerage terminals and all of you figure out my news for today, or it's on your trading platforms, in the private company world, in the public relations world, they need to work much harder for their stories to get out there. So they need media databases to target and pitch to. And so we built a targeting and pitching product a couple of years ago that we shelved. And through the acquisition of Newswire here in last November, we were able to merge both our tech stacks and their database work to be able to come out with a world-class leading pitching and media database product that is human curated, not machine learned curated, which is very important. We'll talk about machine curation in a second with our product, Amy. But those 3 products in itself, along with the monitoring, are something that both public and private companies need. And so one of the objectives of mine strategically has been to fit product sets into our private company sector, where we have a catalog of products to sell or a stable of products to sell, absent of just news distribution. And so a leading example to the reasons why, or a quantifiable reason why you'll understand and appreciate the strategic part, is that when I sit at the table with you as a private company, regardless of your size, you have budget and or buying news distribution, database, pitching, monitoring, and analytics. And you're buying it from somebody. And I come in to talk about the value prop of what AccessWire has to offer you, right? I have a tech-enabled platform that's leading edge. I have an AI engine on top of it called Amy that helps you write your press releases and curate it better than anybody else in the market. I have a flat fee distribution model. I have a better way to target your investors and your media personalities, but I don't offer these other products. So to be fair, the millions of dollars in pipeline that my sales team generates today, they're losing 75% more opportunity because we didn't have these other products. So in other words, I'll talk about a TAM, but the real addressable market to me was much smaller because all I could sell these individuals was news distribution. And you could likely understand that in the world of everybody wanting to consolidate to one single platform, we didn't have the platform for the public relations world. We had it for the IR world. And we've done well there, to Ian's point, going from $1 to 19 today, going from market cap growth and revenue growth and earnings growth. We've done it off the addressable market, not the TAM ever. And so we've got to get to that point. And so that's why these 3 products are very important to us, is it now gives our sales and marketing organizations the opportunity to sit at the table with a customer, regardless of size or public or private, and have an entire depth platform to sell them from A to Z. And so we're excited about those products coming to market. We believe those will be the leading ways that we converge this business from a usage-based business to a full ARR model. And folks that know our business on a reoccurring way, about 85% of our revenues are reoccurring, but it's usage-based reoccurring. So when they use, you recognize, right? Although you may collect and have deferred revenue up front, there is a little bit of lumpiness in some of that. So these products will enable us to flip this business into a true ARR is where we're all after, both from a multiple perspective from a shareholder and both from an ease of operation of a business and scale. It's important to us. So to digress a little bit about something that we talked about just a second ago is that we compete from an AccessWire perspective, and that's the product we've had for years. I think it's important to think about who the leaders are in the space, right? What the addressable market is and where we sit today. And so just for clarification, before I get into the other folks above the line, our brands is AccessWire and Newswire. It's about 5.8% of the market. These numbers are as of March. We'll publish again here after our August earnings and talk about our totals kind of first half of the year, likely going to grow beyond the 5.8%. And so there's three things to think about in this slide that we're going to talk about here. One is, who is the oldest newswire in the world, right? I have Cision PRN, but I think most of you know it as PR Newswire. PR Newswire started in the early 50s, 54, I think they were. They went through an evolution of who was going to own this asset. I think Western Union at some point owned them. UBM out of France owned them. They ended up being sold off to Cision several years back that became a public entity. Cision ran the revenue to almost $1 billion in media monitoring, database analytics, and news distribution. And they account for about half of the market today in news volume. This is a global. This is not North America. It's a global volume. And the second is Globe Newswire. Used to be owned by a NASDAQ property. It was sold off to a PE firm. They changed their name a few times. MarketWire was a part of their portfolio for a while, now known as Notified. They operate about 24 to 26, call it 25% of the market today they have. And then another name that you may know, BusinessWire, Berkshire Hathaway. It's a Warren Buffett property, about 18% of the market. And if I go back 2 years, BusinessWire was almost close to 30% of the market. And they've continued to retract from a couple of different ways. And this is the second part that's most important. When Cision and PRN joined forces, what enabled them to do it is they got the total addressable market opportunity, database, analytics, news distribution, newsrooms, and they could sell the entire suite as Cision Cloud to their customer. That expanded their market share because of that ability. Conversely, BusinessWire sells news. They sell nothing else but news distribution. They always have and they always will. Matter of fact, they even got rid of their new media room business and gave it to Q4 in a partnership a couple of years ago. So the reality is that point solution or a single siloed approach, if you think about it that way, customers don't want anymore. BusinessWire sadly is gone. Revenues have decreased about 35, 40% during the time that we talked about their share decreasing, as well as employee headcount also continues to decrease as a result of that. So the total depth product platform is very important. It is not a model that we're taking from Cision. It's been a model we've had all along. We ran it in our IR business. We know what works. We know how to generate gross margins in this business, upwards of 80%. Our consolidated gross margins are mid to high 70s, but in our news business, we can turn 80 to 82% gross margin. And a news standalone basis from an EBITDA margin perspective is close to 30%. It's a scalable product for us. It represents the biggest opportunity to go from 10,000 customers to 50,000 customers in the future, in long-term future. It enables us to drive our spend, average spend per customer. We'll see in a slide or two from here that will grow that from what was 5, now 8 to 12 and 15,000 in the future with additional products. We go in with this slide as part of our sales deck, believe it or not. And some folks have never seen this before from an investor presentation, but this works for us because we go back in history to show this 5 years ago when we were at like 1.5% of the market, right? Everybody has to start somewhere. The most important part of news distribution is the distribution itself, right? The human element we'll talk about in a second, but without the distribution, you can't get the customer. It's like the chicken and the egg. We came from a background of SEC compliance, as we talked about. We came from a background of exchange relationships, as we talked about. And I come from a governance compliance background. So I knew all the people that we needed to talk to. And so we teamed up with the best distribution networks of individuals. Like Bernadette Lee is a VP of distribution for us, about 27 years experience in the industry. She helped build MarketWire's distribution, which eventually now is Globe Newswire's distribution. And like down to my chairman, the former CEO of one of the largest newswires, MarketWire, before it was got bought by NASDAQ. So we found the brightest people in the room, so to speak, to team up with our strategy and tech side of this to build what AccessWire has become today. It took us years to build that. If any of you are listening to the call today that were early investors, you remember the fact that I would say, well, we're close to getting broker terminal distribution. We're close to getting Schwab or TD Ameritrade or whoever it was at that moment, because it takes time. It is very difficult to do that. But today we're one of the only news wires. If you think about the ASX, the TSX, the OTC markets, NASDAQ, New York Stock Exchange, LSE, all are partnered with us and have integrated solutions and are using AccessWire today. The RNS through London Stock Exchange, every foreign filer or exchange listed company that does news distribution in North America uses AccessWire today. Every IPO client of the NYSE uses our whistleblower product that's plugged into AccessWire today. Not many other newswires have any of this. So we built beyond the distribution the right hooks into the right platforms globally to be able to get this business from 5.8 to 15% of market share at some point. Our goal is not to be the fourth. Our goal is to be the third and or at some point the second largest news distribution and storytelling platform in the market. We got there by two ways, right? Organic and inorganic, right? There's obvious ways to do this in every business. And you've talked to many companies about their acquisition strategies and their capital allocation and how they deploy capital. As you all know, we raised money several years ago and sat on cash through COVID, generating even more cash, buying back stock, still generating more cash, trying to figure out the best asset in the world to buy. And what does those assets look like? You could buy database companies and analytic companies with high valuations, or you can buy a news distribution business like Newswire that built some tech that had a wonderful name and just happened to have a bunch of customers. And we had known these people for years. We watched their business grow. We watched their tech stack grow. We watched their brand get built. And ultimately, in November, we came to a decision to purchase the business for $43.9, almost $44 million, using cash, seller note to begin with, and a little bit of stock. Stock was about 4 million, call it 4.99% of the issued outstanding at that time, with revenues of $11.5, $12 million and growing with thousands of customers. The good news is that the product platform and the media database and monitoring pitching products that we got coupled with our own tech is enabling us to now expand our TAM by introducing those at the end of the month, which is great. The newswire.com and pressrelease.com domain portfolios are phenomenal. They were independently valued at over $10 million just in domain properties themselves. And look, in a market climate that we were able to refinance the debt, did a really good job going with the commercial bank Pinnacle and finding a 6.2% interest long-term debt deal with the bank. So I think we fulfilled our obligations there from a short-term note perspective and converted this to long-term, gave shareholders a clear understanding about where we're headed and what we're doing in the business. And it almost doubled our news distribution business. And look, to be fair, sometimes you need a little bit of gas in the engine to go even faster. And as we build and integrate these platforms together, we're now going to see all of the synergies in this business in our Q2 results, both from cost savings, both from revenue contribution, and ultimately what ends up being EBITDA contributions that you will see in this transaction. One of the things that folks have asked most about from an investment perspective is, will you just become one name at some point? And I'm going to tell you that likely is not going to happen for some time. The AccessWire and Newswire independent brands have really good name recognition. You can see by our G2 ratings and some of the accolades that we get awarded there over other newswires. It's going to take us some time to merge those together. We're not in any rush. We don't want to disrupt what we have going on there. And each platform has a lot of feature sets for each customer that we need to spend a lot of time understanding how we put those together and eventually what name that becomes. But today, they're both running completely independent. Think about financial highlights, right? I don't spend a lot of time on some of these things because I know that all of you spend a lot of time reading SEC filings and our Qs and our AKs, and we talk a lot about this on one-on-one meetings with all of our follow-ups with folks. But look, I think the most important takeaway in this business is our communication business accounts for over 70%. At some point, our news distribution business will account for 80% of our revenues and growing pretty quickly. Margin improvement will be seen as a result of Q2 going forward, both in the cost synergy ways and what you'll see. So this business is boiling out to be, kind of a mid $8.5 million kind of quarterly revenue business and growing fairly nicely. We've experienced double-digit growth in our news business for several years. And although I'd love to tell you that's going to continue to be high double digits, it's likely going to be in the lower double-digit range for obvious reasons. When the market does have corrections, news distribution volumes tend to shrink. There is no good source for that data. So we have actually invested in that. And beginning next quarter, we're going to begin sharing market data. When I talk about 5.8%, I'm going to show you the number of press releases by day, if you want to see it, by every news agency out there, so that we can be completely transparent with our investors and the community of how fast we're growing and where we're growing exactly. Nobody in the market has that data. We've had to invest in people here to do that, and both a little bit of tech and a lot of human counting to be sure that we're capturing the right market share in the right geographic region. But it's important to us to look at that by exchange, by geographic region, and by total, so that we can become dominant in certain areas and play off that significantly. So we operate today as AssureDirect. We have brands AccessWire and Newswire. We, by all intents and purposes, as a communication storytelling platform, are a news distribution business. And I think everybody gets that. Most all the questions we get from customers is about our news distribution. Our inbound new customers every day, 90% of them are news distribution. And quite frankly, most of our questions coming from investors and current shareholders is about our news distribution business. So you'll tend to see us break out that even more. We talk about compliance and communications. We talk about customer numbers, but we're likely going to start breaking out a little even further what our news distribution business is and what the independent gross margins are for that, because we want folks to understand the value that that carries for our overall business long term. First quarter last year, I said, did we get to 1,000 subscribing customers? We did at the, by the end of the year that I said we would do it, we did it, compared to the 964 in the prior year. It's about 95% retention and growing. That retention number is growing, and so is the ARPU numbers you see on the side to the right. We started talking about ARPUs at about 2020 at about $5,800, $5,900. Today, they're almost $9,000 and growing. We've got a target to get to 12,000 at the end of this year. We're going to do that two ways, one by additional product sets and one by expanded usage. Customers are really now starting to expand their usage inside of our current platform. And then, of course, these new products that we're starting to talk about. That will help us reach this larger client base that we've talked about earlier, where we now can sit at the table and have a conversation about selling and licensing the entire suite. That's becoming much easier for us upstream as well, right? Look, again, today, MicroCap Company, we sell into any size company, and we win deals in multi-billion-dollar market caps. We win large reseller deals, large public relations deals all the time because of our brand recognition. People are now starting to look at us and think of us like the big three as a predominant news player in the market. Comps, right? We comp ourselves to industry percentages of market, right? Business Wire, Peer Newswire, and Globe. But we also have to think of ourselves from a market comp perspective, right? And for clarification, Cision, Notified, and Business Wire are public companies, so we can only track them based on volumes, and volumes will back into revenues at some point and what the TAM is there. But you think about Innodata, Q4 Inc., and EQS Group, those are three companies in our space, sweet spot, that sell and/or license products in and around the communications and compliance business, right? And so we are the smaller revenue of the four. But when you think about gross margins and adjusted EBITDA and free cash from operations, that for the most part, absent of EQS, is a foreign concept for most of the folks that we compete against. And so from a multiple of EBITDA and a multiple of cash flow, look, I think you do some comps in this business and you'd find in a lot of cases we are undervalued in a lot of areas. We have a very high percentage of insider ownership. And to be fair, if I could get more of it, I would get more of it, right? This is an equity play for me long term. This is a business that will outlast me in a lot of ways, right? At some point in life, I'm going to come to an end like we all do, sadly. This business will continue to go and grow. And that is an amazing thing for our employees and their families, for our customers, and for our shareholders. We're building an institutional company. We're not building a deal. And I think that's very important. So fundamental-based business, as we talked about at the very beginning, we care a lot about our business models. When we run them out 2 years, we look at EBITDA contributions. we look at free cash, we look at reinvestment, we look at capital allocation. We are very careful about those things and will continue to always be. But to be fair, right, because those are all the good things, right? Think about the other side is, again, hey, look, we'll hit 40 million in revenue this year and at a less than $100 million market cap. It is hard to get the attention of the average investor in the microcap space, right? It is a market that requires a lot of research. There is a lot of due diligence that's needed in the microcap space. We all know that. So we have to work hard to talk to our investors and shareholders, to teach them about our business and invite everybody to come in, stop by, kick the tires, talk to more people than just me to really understand what the investment opportunity is here and what Issuer Direct represents and candidly what we stand for, right, as a management team and where our passions are and get to know some of us. And, I would tell you that probably 15 of the top 20 shareholders, by cell phone, by text, know me personally and understand, my aspirations in life. As well as the rest of the management team. And I think that's very important to get a hold of it. And I think it's a unique differentiator for us from an investment opportunity as well. Kind of in closing, right, that the future of where we are, news distribution is where we're really focused. I didn't talk a lot about Amy today, right? Amy is our AI rating engine. It's not ChatGPT and OpenAI. It is a proprietary product and a partnered product that we built to help customers answer some questions and write a press release, and or for them to improve a sentence, paragraph, or entire release with our enhanced recommendation engine. That's a product we're going to give away free starting next week. We've been in beta with it for the last 30 days. We've got tremendous amount of feedback, run thousands of press releases through Amy, and we'll continue to make that product better, faster, stronger. But as we get out the other side of it at the end of the year, there will be a revenue component to that will help us lead us into all these other communication tools that we talked about today. And then lastly, at some point, customers are going to need help. Look, I'd like to tell you we're a tech company and we're a subscription-based business fully, but we're not, right? We're a tech-enabled product platform that's growing to subscription more and more. And our PR Optimizer product that we used to call MAP is now the forefront of where we're trying to engage and expand ARPU by customers using our human capital part, which is our professional editors that look at and critique every single press release for quality. It is extremely important from our branding perspective and our customer perspective to have that element. And we believe there's a revenue opportunity to that will definitely drive growth for us in the future. I appreciate it, Ian, Auri, so much for doing this. And I'd love to be able to answer some questions and talk a little shop with you guys.
Yeah. Thank you. Thank you for that presentation. We really appreciate it. And just a reminder to the audience, if you have questions for Brian, go ahead and type them in the Q&A so we can get those answered for you. And I'll go ahead and start us off with some questions. This is a business I've looked at. And one of the things I've been curious about is what is the underlying driver of revenue for your business in the press release industry in general? Some of the things that come to mind is maybe like IPOs, bull market, is it new business formations, just kind of folks maybe wanting to raise money. I know being someone from the kind of the asset management stock business, usually people get interested when there's a bull market. So are there any underlying trends that kind of drive the interest in press releases or news distribution?
That's a great question. And look, I would tell you that today we're not tracking the number of press releases down to a finite example like that. We do have categories, to be fair, right? The categories typically are the obvious things for public companies, the regulatory filings every quarter, earnings advisory, company management announcements, things of that nature. About 40% of our news today is driven from a regulatory perspective. And those regulatory perspectives are, if I'm a public company, I'm going to do a minimum. I should be doing a minimum of 10 press releases a year. There's the 4 earnings call, right? Press releases, earnings announcements, so the quarterly earnings. There's the 4 earnings advisory press releases. There's likely one to announce your annual meeting and then another one to talk about the results of your annual meeting. At a minimum, if you're a compliant public company, regardless of size, that's what you need to do. So about 40% of the revenue is driven from that. The remaining 60% is really driven from marketing-related activities and public relations activities of announcing new products, trade shows, community messaging, hiring of individuals, and partnerships and things of that nature that come both from public and private companies. We tend to look at it that way because, to be fair, and I'm a good and a bad analogist, sometimes the the regulatory world is like the milk money for the farmer, right? You got to milk the cows to sell the milk so you can grow the other crop, and that takes time, right? The regulatory business you're going to get every year, right? Public companies enter into subscriptions with us because they have to do these things, and they'll pay us $8,000 to $10,000 a year for their quarterly earnings calls, their quarterly press releases, and their IR website updates, right? It's an $8,000 to $10,000 subscription. It's a very easy program for them to get started. And then look, to be fair, everything else is meter-based or usage-based. If you go down the hall to the CMO and you sell them press releases, they do more. And the $8,000 to $10,000 grows to $12,000 to $15,000. If they buy a newsroom, it grows even more. And that's what our client relations team, our CSM teams are focused on, is that revenue expansion. But typically, it's like the 60-40 rule.
Okay. Thank you. And I think my next question, since you touched on just kind of the amount customers are paying, what the new acquisition and the assets that were acquired there, is that driving that usage from kind of a la carte to subscription? Now that you have those additional offerings, it's like, okay, we'll just kind of subscribe and pay the $10,000, or is it like a break even? We anticipate we'll need this number of press releases, so it just makes sense to subscribe. Could you provide some color on that?
Yeah, I think it will. To be fair, I think the Newswire transaction actually increased the call it pay-as-you-go or incremental revenue as a percentage of overall revenue much more, right? Because their business is really driven by inbound. They have a tremendous marketing platform and branding that just drove new customers by the dozens every week just buying press releases. And they buy 1, 3, 5, 10, whatever it is. And so it becomes deferred revenue until the press release is done. So that usage-based or pay-as-you-go base actually grew. To your kind of your question, in the future, it will stabilize that, right? The media database monitoring products that we're releasing jointly are products that are going to turn this usage-based business into more of a subscription-based business. And that's ultimately what we want. We've proven in the IR side, it works, right? Of the 1,700 or so customers, almost 2,000 public company customers, 1,000 are buying subscriptions, right? We've figured out a way how to do that. But again, off a small addressable market, right? 9,000, right? If we flip to the other side and there's millions of private companies to sell to, our belief is we're going to have success selling that subscription-based product to them, which would include, to be fair, maybe just remove the word unlimited, right? It includes your news storytelling platform. It includes your database and analytics and monitoring systems altogether for a flat fee of $599 a month. Click here to get started or sign a contract with your sales rep today. That's what it's going to really be focused on. And at the end of the day, I'm not really sure it matters to me if the customer runs 5 press releases in a year and uses the product subscriptions, right? We have built scale in our news business from a distribution standpoint that we've got some fixed cost leverage here. So if half the customers come in and abuse the platform and do 30 press releases a year and the other half of them you do less than 30, I can still deliver that subscription at call it, $6,000 base a year to start, $7,000 base a year to start at 80% gross margin. Right. And anything they add on to that is incremental to us. So again, scales of economy are very important in the news business. And I think we've built that there to really converge this, to really start to move it that way.
Thank you. And also talking about the acquisition. So you have this media database pitching and monitoring solution. And then you also shared those slides kind of with the competitors. And now you have this more comprehensive offering that you were kind of explaining that the sales team was kind of reporting back and saying, the customers are desiring this. Do you feel, so is it my understanding that kind of now you're on par with Cision and PR? And then, so that's the first part of the question. And then my additional question is, are there any other points of differentiation between you and kind of those players that have the larger market share that's going to help you kind of grow your market share and get more TAM, so to speak?
Yeah, there's a lot of incremental points, right? There's like sales sheets that we've got and kill sheets to talk about how we compete against some of those. And let's address a couple obvious ones. If you think about the world of engagement, and look, I want to be fair that every company that sells a product into the IR space today has some sort of analytic to give. You have to. There's just something like if it's a news product, PR Newswire will tell you how many people looked at your press release, right? Great, good for them. We do that too, right? If you think about an earnings call, they'll likely tell you the amount of people that joined your earnings call, right? Good, everybody has to do that. And if any of you have been in this story for a while or know, and I think Ian, you remember this from a couple of years back, we talked a lot about the analytics game here and how we could leverage and really disrupt the industry. And so I'm gonna kind of lay out an example for you today. If you are a customer of ours, a public company customer, regardless of size, doesn't matter, and you were to license everything from us, right? You're gonna say you're gonna spend $15,000 to $20,000 a year. You're going to upload your shareholders, investors into our platform. You're going to select your media folks that you want to target, whether it's geographic or sector-based, doesn't matter. You're going to select who those folks are. And you're going to start to do work, build an IR website with our team, host and conduct your quarterly earnings call and everything else. And every press release, that pitching product is automatically going to be sending to these constituent bases that you've got, right? So rather than the PR Newswire or the other example of an earnings call company delivering an analytic report to you that says, here's how many people clicked, we're going to identify aggregate traffic across all the things that you did and who are the investors and or shareholders that engage with what, for how long, when, where, and why. And that's actionable data, right? That's the first part. And there's not a single communications product platform tree doing that today, which is very important, specifically in the microcap space. Let's be fair. We're all trying to fight and jostle to figure out who the investors are. We're trying to figure out who is ingesting what and who is doing what. And one of the most frustrating things, and I am, kind of a closet microcap investor, if I could say it, because I spend, 15 hours a day doing this. I don't have enough time for much else. But when I do, I get barraged by emails from some of these guys, right? Their IR firms included. Every single thing I do, they're hitting me. Even when I don't engage, they keep hitting me and they don't follow up the right way. So we're going to help make the IR follow-up more intelligent. We're going to make the PR follow-up more deliberate and actionable and defendable, right? Because at the end of the day, companies aren't going to spend $15,000 to $20,000 with no action, no engagement, right? And then lastly, what we're building, and we have to do this first part that we're talking about. The next part then will be to build lookalike audiences on top of it. So we can say, hey, you selected 100 media professionals in this category in the Northeast. That's great. But based on our research, did you know your peers are targeting these 3,000 in the rest of the region that you're not? And click here to do that. And that's where we'll see incremental revenue growth. So we're building a lot of intelligence into that platform. So again, these are things I talked about a couple of years ago. We just needed assets in the portfolio to be able to bridge and get us there. So that differentiates us significantly. Both public or private, doesn't matter. It gives our customers the ability, because you don't want to, kind of discount the fact that a lot of our private companies are companies that aspire to be public someday, right? So they're actually stock transfer clients of ours, right? And they're trying to figure out how to be public and how to comply and what to do. So they tend to buy some of those things as well. So you want them early on, because candidly, that's where you'll make the most money from these clients in a journey from start to end, rather than getting them after they've gone public and off they go.
Thank you. Do you, with the acquisition, do you feel you have kind of all the parts you need to continue to drive organic growth, or are you still looking into the market to see if there's any bolt-ons that kind of make sense? Or do you feel with everything you have now, you have a strong runway before you might start looking to maybe acquire again?
Yeah, we're in digestion mode, right? I mean, I think we've done a very transformational deal in November that we need to continue to operate, merge, and leverage these new products and go to market. If you look at the portfolio of assets, according to Burton Taylor and Gartner, we're likely missing one area, that's the social component. We will likely partner with that and or build a small component rather than thinking about an M&A transaction there in the social world. We may invest in the years to come in more analytic tools by smaller little bolt-on deals, and that will round out our portfolio of products. I think where we're focused from an allocation perspective of thinking about growth is what in the industry can we combine with and acquire that turns this $40 million business into a $150 million business and grow it. That's where our focus is today, is go get organic growth in double digits, do it consecutively, and those opportunities will come to you. We firmly believe in that. Social component will play a role, If you think about the quadrant of spend of the, $3.5 billion, $1 billion of it is spent in social related tools in the corporate communication space. So there is an identifiable opportunity there, but I would tell you the smaller companies there are driving significant multiples, businesses that typically don't make money. So, we're going to be careful about what we invest in there. And that's why a partnered solution or a small little build on our end may be the way to go.
Yeah. And after, kind of reviewing the quarter and listening to the conference call, and maybe you could just kind of confirm my thinking, is it seems like there was some like refinancing charges and then some fees for M&A, but I feel like once you kind of digest those pieces, it seems like you're going to have a lot of cash flow again. And you were alluding to maybe the second quarter. Is that a good way to think about once everything gets integrated and you kind of get settled administratively, that you'll be kind of back on track?
100%. Yeah, no, we messaged that to your point in our last quarterly earnings call, and even the prior call that we did to announce the transaction, right? There were Q3, Q4, and a little bit in Q1 costs that impacted earnings as a result of charges due to M&A, right? Financing charges, legal, administrative, accounting, auditing, consulting, you name it, right? To do a transaction like that is not a little thing for a company our size, right? So you have, like I said, a great management team, but again, they're focused tactically on the business strategically. When it comes to M&A, I'm stealing 5 to 10 hours a week from each of them, plus other people. So, we had some outside charges, and we messaged that clearly that you saw 1/3 of it in Q1. You'll see all of it in Q2 from a savings perspective. Yes. So you'll see cash flow improvement, you'll see EBITDA improvement as a result of that for sure.
Hey, Brian, I have a question. This was emailed into me.
Yes.
You have over 10,000 customers. I think a little over 1,000 are subscription. You kind of have a 8,600 ARPU. You're looking to track to 10,000 by the end of the year, hopefully to 12,000 the end of next year. Just curious, like what's the wallet share look like on that 8,600? Like, how's that broken down per service? How much of that is PR distribution versus other services or products that you have?
I'm going to give you an approximate number, and I'd follow up to be more articulate on this. I would tell you probably 60% is PR distribution. But I think what's important out of that is that likely 90% of the subscription values that we have in quantities and revenue is because of PR, right? In other words, somebody may come and license earnings calls and webcasts and IR websites from us, right? But they're likely the vocal minority of that 1,000. They're coming in getting news distribution, IR websites, and earnings calls, right? And if news distribution wasn't a part of it, they likely wouldn't be buying the rest in scale. Typically, it's an IRO suite to buy all three. And for showing my age or being in this industry for so long, they call it the 3 Ws, right? It's the wire, webcasting, and website, right? The IRO's office controls expense for those 3 things, and they typically buy them together. And that's why we've done really well in that category, specifically in the small, micro, nano cap space. As you grow out of that space and into mid cap and large cap, because we do have our fair share of those in news distribution, they're buying news only. They tend to not buy those other things from us today.
Mm-hmm. And it sounded like at the end of, maybe it was even this month, you're going to have those 3 areas, the media database, the pitching, and the monitoring kind of fully ready. Would you say that kind of after this month going into the rest of the year, you're probably in the best position to really upsell people, if you want to call it that, into the ARPU kind of offering than you've ever been in your past because of those 3 added products?
That's correct. Yes. Yeah. So adding those 3 products adds, likely $6,000 to $9,000 in additional revenue per customer, right? At a full list price. Likely the first, several hundred of those will likely be at a discount, obviously, because what we'll look to do is add them at a discount with a renewal on their current deal. So we'll likely see less revenue contribution up front on the initial part for that reason, likely more in the $5,000 to $6,000 range. But yes, 100%. We're in the best position we've ever been from that perspective. Correct.
And historically, I know you tried and you did, attack kind of the private company opportunity set when it was just AccessWire. But really AccessWire was kind of becoming more and more dominant in the public kind of realm. And that's obviously a finite amount of companies, but the private company universe is almost infinite. and so that's a much bigger market. And I think if I remember correctly, Newswire kind of gave you a foothold kind of more into the private company world for lead gen and things of that nature. And I'm just curious, like how that is different, kind of attacking a private company opportunity set versus the public one.
Yeah, I mean, look, the sales cycles are an entirely different sales cycle, right? To reach out to a new public company today, you are likely 3 touches to proposal and 90 days to close deal. And that's on a good scenario, right? Meaning there's established need, there's budget authority and the whole bit, and then on a deferred contract. When you get into a private company, it is likely inbound e-commerce or one call close deals for Newswire. And that's what you find in the private company space. To be fair, they're more educated about what they're buying and what they need from that perspective. But again, budgets are very different, right? You get hundreds of private companies buying a press release new every month on newswire.com, but they buy a press release. They like it, love it. Sales rep calls them back and they buy a bundle of 5 or 10 next. And so that's where we see growth there from a client services perspective. But AccessWire just didn't have that. We tried it, to your point, Ian. It was very difficult to understand. Our sales teams were trying to take those inbound calls and sell them and pitch them and run the same sales process we had for public companies with private, and it just wasn't working. And to be fair, we're not private company people, we're public company people. And so Newswire really helped us understand that much differently, how to sell the product. When you go through the AccessWire platform, you enter into contract, you buy your news distribution, you log in, it's like 4 steps, you run your press release. Editor calls you, you get the compliance check and approval, and off you distribute it. You on the Newswire side, you log in, it's more self-service. The minute you log in, it knows what distribution you want, and it tries to sell you 35 other things. No, I don't want this, no thanks. You got to go through all the screens. Customers still do it. The average price per press release on the Newswire side is 40% higher than it is on the AccessWire side per transaction. Because those customers incrementally are buying all these additional things. To be fair, public companies don't want that, right? They just don't. Private companies tend to want that more. So there actually is a lot more budget there when you think about the public relations side than there is on the investor relations side. And so that's why that transaction was important to us, is to get to that point, get those other products to market, and really start to grow that side of the business more so.
You made a big acquisition with Newswire. Auri asked you a couple questions about other acquisitions, other deals. When it comes to kind of pure PR distribution, are there any other kind of smaller players that could be acquired, or do you think you have kind of that area rounded out at this point?
Look, we are always looking, right? There are folks in the market that account for 0.5 to 1 to 2% of the market that we're tracking to see how they're doing and how they're building distribution. I'm not going to tell you that we may not do something with them in the future. Today, I'm not talking to them. We watch them carefully. We've talked to them in the past, like we did Newswire, and had one of those popped up before Newswire, we may have done something, right? For us, it's about market domination. We want to get to critical mass in this business. We're continuing to prove that we can do it organically, and where opportunity sits and value sit, we should be doing it inorganically as well. But again, if they don't grow, then they're not worth buying, right? To be fair, we can continue to outgrow them and use the capital correctly to invest in that. But if we see them doing something that we're not and it's working for them, then we have to look at that seriously. But I would tell you, likely outside of the North American region, we're really interested in Europe. We continue to talk to exchanges there and how we build that public company business, but there's a lot of private company business in Europe now growing on the news side, and we're really trying to figure out how to become a player there as well.
We had another question that just came in. Does the newsroom's brand asset manager complement or compete with and potentially displace digital asset management solutions used by other brands?
If done correctly, yes, it absolutely can. And that's where getting to the CMO's office and down the hall to marketing plays a critical role there. One of the biggest frustration points of news distribution from our customers and by survey to other clients that using other newswires is, where are the assets when I run the press release? Where's the headshot of the CEO? I don't have the chairman's picture. Where's the product headshot or product picture, not headshot? Where is the logo? More often than not, they send the wrong version, a poor quality version. They send one without the right registered trademarks. There are organizations spending a tremendous amount of money for that digital asset library systems today. None of it carries any analytic. None of it carries any tie into their news platform and their newsroom platforms. And so what we built really is designed for that to be a product that matured over time, enable them to go down the hall with that product and sell it back. And so we're delivering analytics to our customers today to what journalists downloaded, what headshots, what logos, what products, and where they appeared, because we're pixelating traffic on each one of those images. So if a journalist grabs your headshot and your logo, your product logo, and redistributes it on the business journals, we're picking up that analytic and serving it back to our customer. Most delivery systems out there don't have that to offer. So it's back to what we were talking about already a little bit ago about this analytic platform. It is tying all those things together. And so it's the future, it won't be about, hey, license our newsroom and get all these things. It's you're buying a communication storytelling platform and you just get all of this together. I don't want to call it the Netflix model, right? You get all the genres, right? But in some ways, that's what we're trying to build, folks. And at the end of the day, if they don't want to use the digital asset component, it's okay. There's a tremendous amount more value that they're getting there. Without that, it still defends against the prices that we'll charge.
Well, I think we're bumping up against an hour. I appreciate the time today. You know, it's a very interesting company. I mean, it sounds like you're more or less by the end of the year at a 40 million run rate. You think you can take the communications division from 5.8% up to 10% in market share in the next year or two. You know, I think it's a very interesting story, and we appreciate you coming on and telling us more about it.
Yep. Wonderful. Ian, thanks, Auri. Nice to talk to you guys.
Thank you.
Thank you.